Hi, you're here with Andrea Bobkowicz, and I'm here to talk to you about flow-through shares. So this is actually a very complex issue to talk about. This strategy is not for everyone. It requires a case-by-case analysis of each individual situation before investing. Suitability is most important, and there's a lot of risk involved. So I want to give you that disclaimer a little bit ahead of time and let you guys know what I'm going to be talking about. So it's really not for everyone. So let's start with flow-throughs. All right, flow-throughs. This is a tax strategy, not an investment strategy. Let's start with that. So I've been 25 years in the business. I've been investing in flow-throughs for many, many years. Personally, I invest in flow-throughs every single year for myself. It is not for everyone, but it is very interesting. So let me start with the fact that I live here in Quebec. I invest a lot for Quebec flow-throughs, so I'm going to talk specifically on those ones. Flow-throughs are basically small mining energy companies, resource companies in all different areas in northern Quebec that are looking to finance business. Very often, governments are asked to help start up these companies, and they very often participate in help. However, after a year or so of mining and looking and what have you, these companies accumulate enormous amounts of cost, debt, and impact on their balance sheets. And they still have not been able to have good sales. So their balance sheet is quite difficult. And they go back to the government and ask for more funding. The government's saying, no, we can't keep funding all these companies. However, we will provide you with an eligible flow-through, an ability to transfer your built-up losses, your built-up credits onto an individual or elsewhere for you to source your own funding. This is the basis of flow-throughs. These small companies go out and source money to continue building their business, and this is a very positive enforcement here in Canada and particularly in Quebec. And so these companies sell their losses, again, not for everyone. They sell their losses to affluent investors looking to reduce their taxes. And so this is what you're doing, is you're buying these flow-throughs. And it's a very interesting and advantageous investment strategy for some. So let me go through some of the steps. There are only about 15 issuers in Canada and about 4 issuers in Quebec. Quebec offers a very attractive tax benefit. Flow-throughs are basically investments that you hold until a final deadline. At that deadline, all the sale is 100% capital gains. However, as a Quebec investor, the Quebec government does not have a capital gains tax on flow-throughs. Very advantageous for investors. The second thing is you have 125% tax credit, which is also very advantageous for Quebec investors. Canada is still only at 100%. There are very few issuers out there that do offer these, so I think that this is something that is very finite area of expertise. Now, just for you to understand flow-throughs, this capital gain opportunity and tax deductibility is very specific, and it really is something to consider in an area of eligibility and consideration. So these are the things that you really should consider if you're looking at investing or putting this as part of your tax strategy. You should have minimum $100,000 of income. That should be part of your strategy. This is ideal for someone who's had a significant sale of a secondary property or has a significant capital gain and taxable impact. This is something that you can use to offset that impact. If you have no withholding tax at source and you have quarterly installments to pay on your income, this is also an ideal situation that you can use to offset. There's also an opportunity here if you receive a lump sum upon termination or retirement of an employment, then you're going to have a sizable tax impact there. So this is also an opportunity to use it there. Really consider your situation as to what opportunities would be available to you with regard to flow-through shares. Now, always do this in concert with your accountant. Very important to have your accountant involved because they will be able to guide you as to whether or not this is really viable for your particular tax situation. Everyone is very particular. So I thank you for listening. Tune in, stay wealthy, and please feel free to Google me, Andrea Bobkowicz.